Is now the time to buy or sell a house? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article written by Jason Murphy from news.com.au. Aussie house prices. The RBA speech fuels confusion about whether prices will increase or drop. And, well, I can't say anyone is quite surprised. The RBA, once you get to follow them a little bit, you lose a little confidence in their prophetic ability and to predict what's going to happen into the economy. Now, I've been following a US YouTuber called Lewis Rothman, and he does a YouTube channel over in New York. He's got a small business where he repairs computers, and he's been looking at moving office. And he's been doing, just a series where he's discussing going from one location to another and just the insane real estate market in New York. It's just crazy the amount people are paying over there. What he's finding is that, people are hoping, they're hoping in New York that there'll be a crash, a correction, so they could finally get into property. But he's noticed that a lot of big businesses like, the Apples, the big tech companies are coming in and doubling down on New York, getting more floor space. So that means they're going to have more employees over there paid at a much higher level. So the lower middle class there that can just scrape by in New York are going to now have to compete with a whole group of tech people. And you might get more of an impact on housing affordability there. So it's going to be interesting. He's arguing that perhaps that could actually see an increase in house prices. That New York could heat up even more. What do you reckon? It was interesting to hear. I wonder if we could start to see similar things here in Australia with the insanely low cash rate that we have at 0.1%, and the K-shaped economy that we've got with the haves and have-nots, or those in housing and those who are not. Could we start to see more people jump into property? Even if you have investment properties where you're not getting a return, will people hold on to it for the long term hoping for a return? So we'll have to see, everyone. It's all up in the air. So let's have a look at this article. So is Australian housing going up or down? The big problem with the housing market right now is even the Reserve Bank doesn't seem to know. And I did show you that wage growth prediction chart that I've shown many times. It's the RBA, guys. The RBA isn't in charge of interest rates, and they are supposed to keep a handle on unsustainable debt. But they seem unsure or even in denial about what's happening in Australian housing right now. The RBA governor fronted to the Australian Parliament House during the week and responded to questions from the Economics Committee. What was going to happen with housing, they asked. It does appear that the trend is towards higher housing prices at the moment, and that shouldn't surprise us. Lower interest rates do mean higher asset prices, said RBA Governor Philip Lowe. That seemed clear. It was also consistent with a recent major speech by a Reserve Bank official which said that boosting asset prices was meant to make households richer so they spend more. Well, this is the wealth effect. There is a noticeable wealth effect with increased housing prices or housing value. You perceive that you're wealthy. Oh, look how much our house is worth. I deserve this. I better spend that. I better put that on credit or afterpay that. But we're also entering we've also had the first recession in 28 years, and we're entering a period where we will feel the economic ramifications of that. We'll have to see if the government pulls back the stimulus. That's the real question. The danger is, with the RBA intervening in the market and the government stimulus softening the blow, that they could surge housing. They could overheat housing, at least temporarily, until the government starts to pull back on the stimulus, until trading while insolvent disappears, until banks stop being so friendly and those mortgage holidays disappear and they start actually foreclosing on properties in September next year. So we could see a little spike in property and then a correction next year. Is that a dead cat bounce? But moments later, the RBA governor pointed out weak population growth, rental vacancies, rates peaking in Sydney and Melbourne, apartment markets, and falling rents. But see, it's different markets are at play. You know, while even that remains the case, it's hard to see a generalized, widespread increase in house prices, he said. I was puzzled. That seemed to imply he didn't expect house price rises. To add to the confusion, he emphasized the point that population growth is key. Across the country, as a whole, population growth is low. I'm not expecting to see big increases in house prices. Well, see, this is the thing. More than half of our population growth has been due to immigration, migration, people coming to Australia. And usually they start off in Sydney or Melbourne before they go to other parts of the country. And I would argue that has played into the reason why property prices in Sydney and Melbourne have grown substantially in living memory. We also have international students, and Melbourne, Victoria, is quite dependent on that. Or I wouldn't say dependent, it's probably the wrong word, but Victoria, well, our universities are dependent on it, that's for sure, and our states enjoy the benefit of that dependency, and that flows through to our property. We also have international tourism, everyone, a huge portion of our economy, which is pretty much dead at the moment. And that means that a lot of Airbnb properties that would cater to tourists or even Australian tourists that couldn't go interstate are now flooding the rental market and suppressing the prices there. I think we'll see a hit in apartments. You know, I wouldn't be running out to buy an apartment now. I think some people will have difficulty giving the things away. But housing in particular locations a little bit different, maybe, you know. We'll have to see. Once again, it comes to location, location, location. It's not a uniform property market across Australia, and it shouldn't be. It's never going to be. I mean, I'll bring up a little map here that I haven't shown for a while. Where is it? Where is it? This one here, the unit price growth map. You can see, look at the differences. You've got the Red Rooster line out to the west, where unit price growth hasn't been as good as the Goat Cheese line, with all the hipster suburbs and the posh areas along the east coast. This is the problem when you get declarations for property growth in a whole city or a whole country or a whole area. You need to get to a much finer level. We've got a neighbour looking at selling a property, so I'll have to keep an eye out. I've asked him, let me know how much it goes for. I'm hoping it goes really high. So, are prices flat? If so, that could make it a good time to save a bit more in order to buy later. But the governor continued to mix his messages by urging first-home buyers to get into the market. It's actually a good time, if you're a first-home buyer, to buy the property that you've wanted. Interest rates are low, and they're going to stay low. I think it is a good time to buy. As the next chart shows, population growth is forecast to be lower until the end of 2022, which is about 19 months away. There you go. Population growth is expected to be much lower. The RBA is in a muddle. It doesn't seem to know where it expects housing to go, up or down. It is focusing on the theory that low population growth will keep a lid on house prices. That would mean less willing buyers for homes. But theory and reality are often only distant cousins. Meanwhile, reality keeps kicking the Reserve Bank governor in the groin. Australia is in a new house buying frenzy. That's the reality. The amount of money being borrowed to buy housing has just hit a record high of over $22.5 billion in October. There you go. There's got total of refinancing, owner-occupier, refinancing, and investors. These are all excluding refinancing. Okay, damn. Look at that. Look at that, guys. How much of that is fueled by home builder? Why interest rates matter most. And interest rates have just hit a record low. That latest lurch lower took the official rate from 0.25 to 0.1. That's translating into crazy low mortgage rates. You can get a home loan with an interest rate under 2% now, which is almost free money. Home buyers are not shy about borrowing up big. Every capital city in Australia saw house price growth in November, and regional areas grew twice as fast as the capitals, according to data from house price tracking company CoreLogic. We're bouncing back very fast. CoreLogic head of research Tim Lawless says the housing market is healing from its wounds remarkably fast. If housing values continue to rise at the current pace, we could see a recovery from the COVID downturn as early as January or February next year. That's even before all of the ramifications to the economy play through. The amazing thing is, the borrowing is all for owner-occupier housing. Investors are not back in the market, as you can see in the above graph. Well, they're not getting all these grants. They're not getting the stamp duty bonuses. Rents are down, making investor housing look like a bad option. However, if investors come rushing back, tempted by rising prices, the market could hit even more spectacular highs. $1 million homes turning into $2 million homes, and so forth. Does this make sense? The economy is not great, unemployment is up. It will take years for joblessness to reduce to the levels of early 2020, which are not very good. It doesn't really feel safe for Australian house prices to be even higher and debt loads to be heavier while the economy is weakened. This is the big problem with using the RBA to accelerate the economy. When it cuts interest rates, it is supposed to rev up businesses. Businesses are meant to borrow to build more shops and factories, buy more vans, hire more people. Once again, this is all in theory. The reality is households do most of the borrowing and they don't hire people. They just bid up the prices of existing assets. See, this is the problem we have in Australia right here. Right here. What Jason's talking about. The problem is, well, I looked at it yesterday. The number one, the biggest market cap company in Australia on the ASX is the Commonwealth Bank. If you look at the top 10, we've got a bunch of banks, a few mining companies, a building materials supplier, and the duopoly of Woolies and Coles. That's our top 10. Compare it to America. Look at the innovative companies that they have in America. Services that we all use every day. Here in Australia, digging stuff out of the ground, building spec houses pretty much, and feeding ourselves. That's it. That's how we're not an innovative nation. Why would you bother going through the pain and hassle of starting a business here in Australia, of jumping through all the hoops, dealing with all the rigmarole, bureaucracy, the red tape, the BS, even thinking of creating jobs and taking on people in Australia, dealing with all of that, when you just buy a house and flip it. This is why our economic complexity is going backwards. This is why people who are calling for a boycott of overseas or Chinese manufactured goods and are saying buy Australian are going to be rudely shocked when they realize some things you can't even get made in this country. I mean, that's just the way the world is. So, yeah, I'm not surprised at all. The RBA should be aware of that. They need to create incentives for businesses, and they tried to do that. They chucked loans at businesses and all of the, why bother? Why bother? They're going to, those in power are going to do everything they can just to chuck it at housing. That's it. So timing is everything. So the RBA seems to hope that even though it has cut interest rates back to the bone, low population growth will keep house prices from going bonkers. Let's assume for a second they were right. Maybe during 2021 we will all realize there are actually more houses to go around than we need, and house prices will moderate despite the super low interest rates. Well, see, here's the thing. What it'll mean is that people who've got projects in the pipeline may delay them. That could flow through the construction sector, or people can just sit on them. If developers have enough bank, particularly with rates so low, and they've got a whole lot of stock, they may just sit on them for a year or two. I've seen it happen. It happens, guys. Just sit on the stock. Wait, don't let it go for such a low rate, because then you'll devalue everyone else in your complex. It's only when people get really desperate where you'll see it happen. That's why they've gone and done everything they can to address that desperation. And then what'll happen is they'll just open up the floodgates. They'll open up the floodgates. That's what I think will happen, guys. Because you got to think, what can the government do to prop up property? We've already got Home Builder Mark II. We'll maybe get Home Builder Mark III. Mortgage Keeper, the joke that I constantly make, may materialize into something. Or they'll have more people coming in from overseas. So there is still a timing problem. The RBA has promised super low rates for 3 years. Official population growth forecasts show low growth, but they only go out until 21-22. That leaves a risky period for housing where interest rates will be at record lows and population growth may bounce back to record highs. And progress on the vaccine has been very promising since those forecasts were published. If a vaccine arrives in 9 months' time, there is a chance of foreign students, migrants and tourists all come flooding back. The government will probably welcome back loads of people on temporary visas to try to give the economy a nudge along. That could mean a couple years of a house price boom. The property price implications of high population growth and low rates are obvious and frightening for anyone who doesn't yet own a home. The RBA needs to think much more carefully about its impact on housing. And, well, see, that's the thing. It's all about housing in Australia, everyone. That's it. I mean, in one regard, we need to get a bigger population here in Australia so we have a bigger market, we can compete on a global scale. Remember the days when they used to say Australia needs a population of 100 million? We need more cities all around the country. You know, I wonder if that would even have political legs these days. So, what do you think, everyone? Where do you think it is heading? Do you think we're at risk of a property boom next year? I can't see it happening in apartments. Can you see it happening in housing? What do you think? Are you buying in property or are you waiting and holding? Stranger things have happened. Just have a look at some. We'll have to keep an eye on New York as well, everyone. So thanks for watching. Please like, share and subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you enjoy watching the channel and the content that I bring to the table here, there are a few ways you can support the channel. You can just interact with the channel. It helps it grow, helps it spread. You can support us financially by joining us on YouTube or Patreon, using any of our affiliate links you find at Amazon, eBay, Independent Reserve or Kucoin, or AussieBroadband. You can buy a merch from HeiseSays or Teespring, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone, and I will see you all next time. Bye for now.